Hey everyone, welcome. I'm here with Rafina Zonbia from Roll Page Connect Realty. My name is Jerry Fragomeni. I'm from Uptown Financial Mortgages, and we're here at our office, and we're here to talk to you about a number of things relating to mortgages, real estate, investing, and I think Rafina has a number of questions for us from her social media database, her clients directly. So I'm going to be here on the hot seat answering your questions. So Rafina, I know your clients had a number of questions in regards to mortgages, the state of the nation,
Right.
with interest rates and how that's going to progress over time. Yesterday we had an announcement from the Bank of Canada,
Right.
and we all know that by now that the rates held steady at 5%.
Right.
So maybe I can get right into that, or it's probably a question from your clients.
It is. So they're a little nervous. They want to know what's happening.
Right.
Will rates drop? When will they drop? Will they go up? Because as you know, with the stuff happening in the Middle East, there's a lot of uncertainty. We just want to know what's your take on all this.
For sure. There's a lot of factors from an economic perspective as well as geopolitical,
Right.
that may impact interest rates moving forward. Inflation, as we know, the target rate's 2%.
Right.
That's now down to 3.8. It's heading in the right direction. We're seeing food prices still driving inflation, higher prices, gas prices. One of the biggest factors, I think, or one of the factors towards inflation is also mortgage interest rates. So the economists were saying if you take that number out of the equation, we'd already be at 2%, which is kind of a wow factor. Right? So looking down the road, they're expecting rates to drop probably mid 2024, I would say quarter number 2, with the expectation of rates getting down between 3% and 3.75% by 2025. So that's what's being projected at this point in time.
This brings me to my next question. What do you say to those people who are maxing out their home equity lines of credit, who are borrowing from family and friends, who are just at max? They need to sell but they're holding on for dear life. What do you say to those people? And do you have any solutions for them, any support?
Right. To your point, I mean, during the pandemic, let's go back a few years.
Right.
Looking at, people stayed at home, they weren't spending money. So what happened to the bank accounts? They were able to save a lot of money, right?
Right.
So over the last couple of years now, spending is back on the table. People are out. They're spending more money. Interest rates have increased. So their household debt has increased. Yes. We're seeing credit card debts increase.
Yes.
So the level of spending has come down. And even if people have a little bit of money left over, what they're doing is they're trying to look for other savings, right? Like GICs, I think is 5% right now.
Right.
You could put it in a GIC. So that even diminishes their spending power even more. Some people are even drawing out from their mutual funds and savings to pay down their mortgage. And people are strapped today, right? So to your point, like what are the things that they can do? So depending on their risk level, where they are in their life, what their savings looks like right now, how long can they prolong this for? It's very situational.
Yeah.
But in the short term, I would say if they can hold off for the next 6 months or so, that would be advantageous, right? And if you can borrow from family, great. And those people that are, at their boiling point at 80% LTV, which is loan to value, and they really can't afford to make those payments moving forward, then at the end of the day, worst case scenario, they may need to think about selling their home.
Okay, there we have it, folks. Moving on, Jerry, I personally think that this is the market where first-time home buyers should be thriving. They should be all over this, right? I personally have a few that are very nervous. They don't want to get into the market because they don't know where rates are going. What do we say to them?
So for first-time home buyers, jump in. Regardless of the market, I believe that you should jump in, build your equity.
Right.
Right now, I would say, interest rates are high. It's short-term pain for long-term gain.
Right.
So if, first-time home buyers looking at a place, to purchase something and hold it over the next 5 years, historically speaking, we've seen equity and the prices of home increase over time.
Absolutely.
Now, do they qualify to make those payments? Because the stress test is a little bit higher, right, with traditional banks. But there are other options, such as B lenders or even private lenders, right, which is a shorter time frame for mortgages, and even looking at what type of mortgage should they get. Should they get a fixed mortgage? Should they get a variable? We're seeing, we've seen over the course of time, we've seen a lot of people convert from the variable product down to the fixed product in short term, maybe 1 to 3 years is the most popular. But now I'm starting to see from my current clients a shift in that. So a lot of renewals are coming up. I think there's 3.4 million people in Canada looking to renew their mortgage over the next 12 to 18 months. So, those people that are still in the 2% fixed range, they're going to get a big shock. Their mortgage payments are going to be double, sometimes triple in some cases. So now we're seeing that shift from people going to a variable product because of the economic forecasts with inflation and interest rates looming in the background to come down in 2024.
Okay, so in your opinion, do you think it's best to maybe go to variable side since we might have gone as high as we could possibly go?
Now, again, that's kind of a loaded question because it depends on the person's situation.
Okay.
Right? So, for someone who's more risk averse, who can maybe take another rate increase or two over the next 6 months because we really don't know what's going to happen.
Yes.
Then I would say yes. I would recommend it, but for someone who has a static income, maybe a family that's just starting out, it's their first home and they need those to know what they're paying every month, keep it steady, maybe stick with a fixed short-term 1 or 2 year until they get comfortable paying off that mortgage, and then they can eventually move to variable depending on the situation in that point in time.
I like it. I like the sound of that. Okay. For my personal first-time buyers, right?
Yeah.
They're self-employed, they make decent income.
Yeah.
Would you recommend, and of course you haven't seen their numbers or anything, you're trusting me here, right? Would you recommend that they go variable for 1 year, maybe with a B lender, and then after that refinance and go with an A lender? Because rates are projected to go down mid next year, no?
Yes, well, again, it's all situational. I think it's, advantageous to look at everyone's personal situation.
Okay.
And that's what we do here at Uptown, is that we look at everyone's situation. We look at their credit. We look at their income. We look at their financial situation, if they're self-employed. And all of those factors come into play when deciding, are they a great fit for product A, product B, or product C? Okay.
A very lawyer-like answer, ladies and gentlemen.
No problem. I think one more, maybe a couple more things on the first-time home buyer front. So there are other programs out there for them.
Okay.
Such as rent-to-own program.
Okay.
Where they can, go through the buying process with a trusted realtor.
Okay.
Find their perfect home.
Yes.
And the rent-to-own programs, there's a few companies out there that they will fund the mortgage for them.
Okay.
For the first-time home buyer. And they would build a plan over the course of 2, 3, or 4 years, or whatever that term may be, and build in a savings plan so they can save for their down payment at the same time, which will be embedded in their payments. Okay. I'm not an expert in it, but that's one of the options.
Okay.
Another option is there's companies out there that'll contribute to your down payment. So Rafina, from your perspective and your clients,
yes,
and what they're feeling right now, whether it's a first-time home buyer, your investors, or someone looking to upsize or downsize, what are the major things that you're hearing from them?
Most of them are nervous. My first-time home buyers, they're just nervous. They don't know what's going to happen. Most of them can afford their payments. They just don't know, hey, listen, is it going to go up? And when the rates go up, will I be able to afford that, right? My investors, they have a couple of properties that they need to shed. If they do sell now, they'll be losing, so they're just holding on. They're not even renting them. They're paying out of pocket. They're paying those mortgages out of pocket because as soon as the market shifts, they're going to throw it up and get rid of them, right? So throughout, it's just nervousness due to the uncertainty.
Right.
What do we say to those guys?
So I think a part of it is education, right? So it's educating them on the facts, on the current market that they're looking in, continuously looking at the geographic area that they're looking to buy.
Right.
What's happening in that market, right? Are prices going up? Are they going down? Are they holding steady? Also looking at, what does their financials look like overall, right? Do they have the down payment? Do they have the capacity to pay a higher higher mortgage payment with these interest rates, how long can they prolong that for? And, you know, here at Uptown, we do have those templates and those products that can, you know, that we can provide you to break that down over the course of, you know, how many years and projecting, you know, certain things like mortgage interest rates.
Awesome.
Time and payments.
Awesome.
Yeah.
How do you talk them off that ledge? Just by educating them? Because there's no shortage of info, right?
Right.
We are constantly keeping them informed.
For sure.
We're doing exactly what we have to do.
Yeah.
But because of the uncertainty in the financial industry, they just decided, you know what? Let me hold off. Let me wait.
Right.
It's not lack of money for a couple of them, right? And for those guys, they're just saying, hey, listen, let me wait. What do you do then?
Yeah, I think it's just continuously talking to them, right?
Yeah.
Just giving them the information, killing them with the details.
Yeah.
Right? And then providing them with the facts so that they're educated.
Yeah.
And I know people today, they have access to everything.
Everything.
Right? They know a lot. They use a lot of, you know, real estate tools.
Yes.
To look up things that give them calculations of values and estimated rentals and things of that nature.
Yes.
But I think, you know, just nurturing that relationship, keeping them up to date on the market, on news.
Right.
Talking to experts in the industry and relaying that information onto your clients.
Yes.
And eventually, you know, they will come to the table and they will end up buying.
Fingers crossed they will. Well, this has been awesome. Thank you so much for your insights. Thank you so much for spending this time with us. We certainly appreciate you. Can you tell the lovely people where they can find you?
You can find me anywhere on social media. Just look up my name on Google. You can find me everywhere.
Awesome. This is great.
Thank you for having me.